Thank you all very much for coming. I'm not sure if you can hear at the back. David, if you want to tell everybody there to keep quiet, you can. I will get started now. My name is Mark Skapinker. I am managing partner of Brightspark Ventures. Brightspark Ventures is a Canadian-based venture capital firm. We've been in business for 18 years. We have an office in Toronto, an office in Montreal, and we invest in technology companies. We invest predominantly in Series A companies, reasonably early stage companies, and we've been doing that for many years. Over the last few years, we've changed our model of how we invest and where we invest. And so most of our investors, the vast majority of our investors are individual investors. The people who invest in us and in the deals that we do are individual Canadian accredited investors. I don't want to spend too much time talking about Brightspark. I want to get on with three companies that are presenting today, but we do have a table just at the back of the room over here, and if anybody's got any question, Gord Wade is standing here on the side and would be happy to answer any questions and give you some more information if you're interested. So today we do have three more presenting companies that I'm very pleased to introduce to you. But before that, in the front we do have three judges that are sitting here that are going to be doing the judging. They are Mike Lauzon from Canaccord Genuity, Michelle Singh from Hub Token, and Sandy Scott from Mistral. And these are the people who you are going to have to impress and convince when you stand up and pitch. The three companies that we're going to be listening to today are Homewise, JustGotThat, and Coda. And I'm going to let them get started. So, Homewise, you're up front.
Hi everyone, my name is Jesse Abrams and I'm the founder and CEO of Homewise. Homewise started with a story. I've worked in digital marketing and advertising for the last 10 years, and about 3 years ago I was working with RBC on their mortgage business. And during that time I learned two really interesting things. One, they are very out of touch with first-time home buyers, and two, when you get a mortgage from them, they're going to do whatever they can to make as much money as possible. So when I was buying a home myself, like many millennials, the first thing I did is I went online and I found those rate aggregation websites. And very quickly I realized it was a waste of my time because most of the rates that are up there are just posted and you can't even actually get them yourself. So after speaking to a few friends, I heard about mortgage brokers who are individuals who work with multiple banks to try to find you a good mortgage. And that was a mess. I had to consistently follow up with my broker. He consistently wasn't paying attention to me, lost my documents, and I just really didn't feel like he had my best interest in mind, and I was lost through the whole process. So it was the classic situation of, there's gotta be a better way. We go online for so many different financial industries. Why don't we do that for mortgages? Mortgage industry in Canada is also huge, at $1.5 trillion, and every year there's $400 billion in new mortgages. Further, there's a very unserved demographic, which is first-time homebuyers aged 29 to 45. There's 175,000 first-time homebuyers in Canada every single year. And in a recent study, first-time homebuyers said 90% of them really don't understand the mortgage process at all. And that's really scary because if you don't understand the right questions to ask, that could cost you tens of thousands of dollars on your mortgage. So that comes to our big problem. The best of the three evils, which are mortgage brokers, take up 55% of first-time homebuyers' buying process when it comes to mortgages. And the problem is they're very decentralized, they lack visibility, and overall they're extremely inefficient because they're generally just individuals who might work for a larger business. So that's where Homewise comes in. We're looking to change the game by automating the broker process, by being online and having great content. What that will allow us to do is be easier, faster, simpler, and always set the goal of finding our users the best mortgage. So how does it work? First off, we have a really easy online sign up where we ask real questions that people will actually understand. Unlike those real strong financial questions, we're not all financial professionals, so we guide consumers through the process. Then we have relationships with already 12 different lenders, some of the largest ones in Canada, as well as some smaller financial institutions. We then find them 3 different options for mortgages. So rather than a classic broker or a bank who will give you one mortgage, we provide 3 with explanations as to why it would be good for your specific profile. And then finally, our tech-powered mortgage experts are there throughout the entire process, however you like it, by phone, text, or email. This is also a growing model, especially in North America. So in the US, Australia, and the UK, there's 3 online mortgage brokerages that are really taking off. Then there's some more of those classic companies that went online recently, like LendingTree and Rocket Mortgage through Quicken Loans. LendingTree alone went online about 3 years ago, and in Q4 of last year, saw 40% growth year over year to net them $300 million in mortgage revenue. It's a huge and growing marketplace. So how do we differentiate ourselves? Why are we better? First off, we're streamlined online, which means that we're available 24/7, unlike classic banks and brokers that are generally 9 to 5 for sign up. 2, we're having a single point of access for document uploads. So rather than having to email and consistently lose your documents, everything in one place with a timeline, and it lets you know where you are through the entire process. We also have helpful content. Rather than a lot of sites like bank sites that have a huge list, we're the Twitter generation. We like things short and to the point, and we want to know what other people's are doing. Finally, transparent support, but most importantly, hassle-free lower costs. We actually take a lower rate than the classic broker to get you lower fees. In terms of go-to-market, we're going to start in Ontario, which is 45% of the market. Through a lot of research, we found our CPA will be about $1,500, which will net us about $4,000 per consumer. Our team is built up with marketers and advertisers who have built a lot of consumer sites, which is going to be great for acquisition. Referral is going to be very huge for us. We already have a relationship with multiple real estate agents to refer people, a lot of awareness and educational content. And so far, we're in the early phases. We're about 2 weeks away from launch. We've run a test group where we actually approved our first mortgage, which was $1.4 million, and we're starting to see some traction from a lot of people emailing us on our website. We are launching in 2 weeks, so we really want to hire some new members of our team, and this is a B2C play, so drive awareness through marketing and advertising. In the end, Homewise is a faster, simpler, and easier mortgage process, and it's all online, and most importantly, it's completely free for all of our users. Thank you.
Jesse, we have an opportunity for the judges to give you some feedback and ask some questions.
What is your traction?
We're brand new. So we've done so far a test group with 20 individuals, of which we have pre-approved 5 of them. So they're in the funnel, and one of them just closed last week on a $1.4 million house. But this is pure pre-launch, just getting traction from sending the message out to different people we know.
How many emails do you have so far?
We have 500 emails signed up to our site, just over that actually.
Can you clarify what is done by people versus software? Like when you said negotiating, is that negotiating via software, or is that actually people, physically negotiating?
It's a mixture between tech and people. So generally the negotiation happens on the human front. We have a relationship with multiple different lenders. So it's not as much a negotiation as we already have lower fees because we have wholesale prices from the lenders. Then the negotiation happens by us buying down the fees based on what the price will be. So what our tech will do will tell us, based on what the level of cost of the house is, what our profit margins would be to make sure we could buy down the rate to the lowest amount without losing our pants basically on it.
Okay, and do you have a sense of the ratio as you scale, like how many, X number of users requires X number of people to support, that kind of thing?
Because everyone's different, we're generally going for a marketplace of first-time home buyers. Those houses are between $500,000 and $1 million. So the buy downs are generally about 20 basis points.
Okay, and sorry, I meant more from the people support angle. So like, if you're gonna have 1 million people or 1 million users, do you need, 1,000 people to support those million? Like, do you have
Definitely
what those ratios are?
A big goal of the business is that we could cut down on mortgage brokers by automating the process. And our long-term goal is actually to cut it down to a point where all the broker needs to do, or salesperson, is be there for support. We want to make sure that a user could come to our site, and we're using machine learning to understand this is the proper mortgage for this individual user. So it would be much more simplified.
Can you just talk for a second about the competition? You talked about Rate Hub and some of the other sort of rate providers.
Yeah.
How do you guys compete with those? What's better and what's not better? What do they do better?
For sure. So Rate Hub is basically, they aggregate all the different rates online. And this bad thing about Rate Hub is it only serves high ratio mortgage owners. So what that basically means is that if you're borrowing at more than 80%, that makes you high ratio, which means you actually have to pay insurance on top of your mortgage, something like $12,000 minimum. So all the rates they post there, if you're actually a normal mortgage buyer, you won't be able to apply for it. So it becomes more of a waste of time, especially when you click to apply, you might see 3.4%, but you could actually only apply for maybe a 3.79. That's on Rate Hub. In terms of other tech sites doing this, there's this company called IntelliMortgage right now who's doing this. These are two mortgage brokers, and if you go to their website, they got an advertising agency to build their website, and it's purely the mortgage brokerage process. Because we own the process, we have content. It's a much more simple learning process, so we'll cut down on the amount of questions we might need. Further, we have a relationship with a company out of Montreal called Flinks. If you don't know what Flinks is, basically they pull in a consumer's financial data, so we could cut down many questions as part of the process if they fill that out. So that's a big differentiator. And we're also free. IntelliMortgage charges $200 per user.
Okay, second question. Looked like your CAC to LTV is about two and a bit times.
Mm-hmm.
Is that your long-term goal, or do you expect to be able to monetize more than just the single mortgage?
That's a great question. Mortgage is just the nucleus of the consumer profile. We then plan on adding in insurance from a property insurance perspective and title insurance. As well, we're talking to a company right now about the potential of doing a real estate lawyer that's automated as well. In Canada, it's fully legal. You could do document signing online. So if we could create a mortgage marketplace where you could get all of your post-purchase services all online, and then bring in partnerships, and we already have deals actually signed with companies like Foodora, as well as we have a deal in the works with a big tech company in Canada to have a home marketplace solution. So once you sign up for us, there's all these consumers who are new home buyers, so they're a pretty sexy proposition to companies to get more value out of them as well. So we look at our long-term value, potentially a lifetime value is around $7,200.
What is projected revenue for 1 year?
So in our first year, we're expecting to close about 100 mortgages. And if you think about the fact that it's about $4,000 per mortgage, that'll be about $400,000 revenue. Thank you.
Thank you, Jesse. I'd like to introduce our next company, Will O'Brien from JustGotThat.
Good. All right, thanks very much, everyone. My name is Will O'Brien. I am the founder of JustGotThat. We're the trusted on-demand services marketplace for home and auto services, allowing our customers to find, book, and pay for services in real time. In the busy world that we live in today, time is of its utmost value, and we've derived value by saving our own customers' time. We've done this by removing waste and wait times from the process, eliminating all of the issues that we have with getting services. So, for example, today to book a typical service, it might take you 2 to 3 days in elapsed time and uncounted hours going back and forth with people on the phone and email. You ask for referrals, you can search through Google, you can search through HomeStars and the like. At the end of the day, finding that match made in heaven seems almost impossible. With JustGotThat, we've made that possible by taking that wait time and waste away and delivering real-time services or real-time availability to customers and partnering with our curated service partner group to provide those services on the platform. And I'll show you exactly how that works. Let's see. So if I'm looking for, and it's not connecting. Okay, do I have a technical glitch? Sorry about that.
But the video? Let me see. Let's see, the Wi-Fi is connected. Wi-Fi is
Toggle, and then you have to go into the next screen.
Toggle and go into the next screen.
1 second, so you see if it'll work. Just gonna drag this. I think you gotta just give me a second here. Let me just make sure.
Okay.
Drag it out.
Okay.
Okay. So once you
Apologies. Sorry about that, folks.
so once you're on the screen, you gotta follow the arrow. And
Yeah.
You gotta just drag it back out.
Okay. So if I need a plumber, I have an issue, maybe it's a clogged toilet, I can go on the platform and I would simply, I can do a text search, or I can actually go and, just click through the category tree. I'm going to look for service calls. This is hard looking sideways. I'm going to look for plumbing. And what the marketplace gives you is a list of available plumbers who are local to me, listed by close proximity. I can click on a specific plumber. I can take a look at the description. I can look at services, reviews. I can pick a specific date and a time. And when I select that, I just click Get It. And it's done. It is that easy, technically, to actually be able to book a service. And it just says you just got that plumbing service call, you got your price, you know who your service provider is, and we do this across different categories. So I'm going to see if I can actually get back to the presentation. Looks like I can. So we understand in creating the model that we're trying to connect sellers and buyers. We do this, our consumers will leverage our due diligence, they'll leverage in-app reviews, they'll leverage all kinds of decision criteria to make their decisions. We make 14% on every transaction that we process. Our service providers, they're able to optimize their revenue, they're able to market seamlessly their excess capacity, and they're able to spend more time doing what they love, which is servicing our customers. It costs us today $70 to acquire a customer. We get $315 back on an annual contribution. Okay, we launched in March of last year, so we have over a year of data. The numbers have been growing quite consistently, so from a revenue and transaction perspective, we're looking good. We have an average of 65% month-over-month growth over the last 7 months. And our transaction growth is growing as well. Of key interest here is our repeat customers. So 41% of our monthly transactions are from repeat customers. And that's important, and I'll get into that. Projections for this year and next year are very good, and we intend to grow quite rapidly with the investment that we're seeking. How do we beat the competition? We talk about 3 things: relevancy, real-time availability, and openness and transparency. So our competitors are used maybe 2 to 3 times a year. That incurs increased acquisition costs for them. JustGotThat users use about 8 to 12 times a year, and we think that we can increase that simply by offering more categories and cross-selling across those categories. Our go-to-market strategy, again, we're looking to take this into the United States, Boston and Chicago specifically. We follow a market playbook that's pretty standard. So we determine what the category is that we want to get into, where we think we can inject ourselves into the market. We curate providers, we set them up, and after a media release and introductions, we start our customer acquisition campaigns. We follow that process by adding whether we're adding categories or going into a new market. So the deal is, we're looking for $1 million today at a $4 million pre-money valuation. We have $375,000 committed already. Proceeds are going towards marketing, operations, and production at a 60-20-20 ratio. The $375,000 is committed from previous investors. And I'd ask, when you're considering about the investment opportunity, that you really consider the totality of our solution, the track record that we've had to date, and the market opportunity that it presents. Thank you again for your time, and please go to JustGotThat, book your next service there, and we will help you get things done as well. Questions?
Yeah, so my first question is, $70 to acquire a customer is very expensive. How are you lowering that?
So it used to be $125, and we lowered it down to $70. And the way that happens is actually quite organically. So the more services that we actually deliver, the more people start talking about it, and you start to create that network effect. That's kind of the organic way to lower the total cost of acquiring a customer. But we have to come up with unique ways to leverage social media and other avenues that are less expensive.
Okay, yeah, because I've never heard of $70 per person. It's always lower than that. And then my other question is, obviously you have a two-sided market. Which one
Yep.
are you focusing on first?
We always focus on the supply side because that's our inventory. We need to generate an inventory in order to be able to sell it.
Okay, I know your competitors. I know some of them. Like Demtech and Southseed, of course, in different market. How are you distinguishing yourself from them?
Sorry, I didn't hear who the competitor was.
I know a few of your competitors on your list. How are you?
Okay.
How are you different from them?
Yeah, so we're different in a number of ways. One is we're actually the only ones offering real-time availability. So when you go in and book, you saw I could pick the date, I could pick the time of the appointment, and I could get that. I don't have to talk to anybody. I didn't talk to anybody, and that appointment was actually booked. I got to cancel it later, otherwise I'm going to get charged, and someone's going to show up at my house tomorrow. So that's one significant differentiation. The other is the reliability and breadth of the service offering. So when we have home cleaning, we have tradespeople, we have auto mechanics, there's all kinds of things that you can do from one platform. That's a significant differentiator, and that leads to what we call relevancy. So by staying relevant with our customers, we get more stickiness, and they actually have more loyalty towards the marketplace itself.
Okay, my last question is, how do you handle dispute resolution? Dispute resolution, if there's a disagreement between buyer and seller, what happens?
Dispute resolution, so the contract is actually between the service provider and the user. But of course, we want to protect our brand as well, and we want that user experience to be very positive. Whenever there is an issue, hopefully they take care of it amongst themselves. If it has to come to us to arbitrate or mediate, then we do that, and we have leverage with the service provider community. Where, as an independent consumer, there's not a lot you can do to get somebody to come back and, fix something that wasn't done properly. But we have some leverage there because we're driving revenue stream to these service providers. So typically we'll get them to go back and fix the issue. If there's issues like someone didn't show up for a home cleaning, which has happened, we have enough service providers in the back end that we can replace that service. Okay.
How much have you raised to date?
We've raised $900,000, 500 of which from third party, 400 from myself. And that was really to build the platform. So we spent 15 months building the technology.
And the 8 to 10 times a year, is that just because of the breadth of products that you talked about versus 1 to 2 for your competitors?
It's breadth of service, it's also types of services. So home cleaning, for example, people might do that every 2 weeks.
And you guys are still taking a clip for that kind of repeat business?
Pardon?
You continue to take a percentage for that kind of repeat business?
Yeah, absolutely.
Yeah.
And additional charges as well. So we might send out a plumber for $160 for a 2-hour service call. It might end up being $450 at the end. The plumber will put in the additional charges, and we take 10% on that as well.
Okay. And from you're headed into Chicago and Boston, I think you said. How do you think about critical mass, like revenue level or number of cities, or where do you want to get to where you feel like you're kind of over the edge?
So in terms of thresholds, we want to get to $100,000 a month in gross transaction volume. That creates some interest in the VC community for sure. And beyond that, I mean, the sky's the limit from a scalability perspective. Everything's on AWS. It's just a matter of going out and promoting it. Building the service partnerships and then getting to the consumer. But I think the market's huge, and I think that we can easily be a $100 million company in the next 3 years, for sure.
Can you talk a little bit about how the suppliers are interacting with your system, what services you're providing to them to make it easier for them to run their businesses other than demand generation? What else do they use your system for? Can they bring their own customers onto your system?
Yeah.
How does that work?
Okay, so they have a quick answer here, but they use a booking and reservation system that we built for them in the back end. Today we give it away to them for free because we want the inventory. But there's a subscription model to be had there downstream where we can offset variable costs for more fixed costs, or variable revenue for more fixed revenue. But it helps them manage their business. They're using Google Calendar, or they're writing it down on paper or things like that. This gives them reporting on how they're doing, what services are doing well, when they're doing well. They can see their bookings in advance to see if they need to increase advertising at a certain period of time, if they need to fill any gaps. So they're getting a lot of value right now for that for free. And of course, our interest is that we get their inventory. We have something to sell. So, thank you.
Introducing our last speaker, I'd like to call upon Brian Sheilds, co-founder of Coder.
Is mic working? All right. All right, hi everybody. Thanks for having me. I appreciate it. My name is Brian Sheilds. I'm the co-founder of Coder Inc. We're a tech company in Chicago. We are a decentralized venture development platform built on the Ethereum blockchain. So our mission is to enable anyone, anywhere to be able to build anything. Our team comes from backgrounds in both technology, debt and capital markets, as well as marketing. And we basically started the company in 2015 to serve as a technical co-founder team and a venture partner to help people launch new innovative technology companies, provide them with the strategy, technology, and growth services that they need to grow the business. We never wanted to be an agency. We never wanted to be a service company. It was always about how do we identify how to architect and design a technology platform to reduce friction to streamline new product development. So our general thesis is that huge opportunities are being missed because people that actually have the subject matter expertise in their field just lack the technical ability to execute. They can identify a problem that they know that there's a technology solution for. They don't know how to build the team, manage the team, launch that product, and bring it to market. Our goal is to provide that service in a technology platform. Obviously, the problem right now, any of you that are entrepreneurs or investors that work in the early stage, there's a million different plates that go into the air, and you got to keep them all spinning as soon as you start launching a new business. You got to deal with your marketers, your designers, your developers, your strategists, multiple third-party vendors if you're doing it with different groups. Our goal is to kind of streamline that entire process, run it on a single technology platform, so that you can kind of aggregate and manage all the different resources that you need in order to launch a new technology business. So this platform runs on the blockchain using some proprietary smart contracts that I'll get into in a second. But basically, the Coder platform aggregates this technology community around the world and connects entrepreneurs, investors, and technologists so that we can originate and accelerate new venture development. So the key thing with any technology, this is about speed, it's about transparency, it's about risk mitigation. If I'm an investor, I want to know how my money is being spent. If I'm an entrepreneur, I want to know how I'm spending my money. I want to make sure that I'm not risking too much of my working capital. I'm getting ahead of my skis in terms of development or pushing my developers too much in terms of scope creep or anything like that. So basically, the Coder platform, through the use of smart contracts and business intelligence, let you know exactly who's doing what and when, if it's on time, if it's on budget, if you're going to be delayed in any capacity, making sure that we reduce that friction and increase speed. So the way that we use blockchain, there's a lot of people that are out there just doing these crypto startups to just raise the ICO, to raise some cash, to build their platform. We took a novel approach where we just went out and built it over the last 3 years before we're launching a token sale. So the smart contracts that we use right now, basically, if I'm a client and I'm working on the Coder platform and I've got a Coder product manager, I can reach a consensus between my product manager, my developers, and my designers on whatever the deliverables for the next agile development sprint are going to be. My funds get drawn onto that smart contract for that sprint, so I'm only risking 2 weeks of working capital. Once the deliverables are completed, they pass the internal QA by the product manager and are submitted back to the client for acceptance. Once I accept it, only then do my funds get released to the technologist working on the project. So I'm basically able to toll gate based on the acceptance of the work being done properly, on time, and on budget. So we basically run this technology for a couple of different groups. We kind of look at it like BMW, right? There's the 3 Series, the 5 Series, and the 7 Series, and you got the I as well. So we work with entrepreneurs, startups, small businesses, and enterprise clients. We basically want to kind of hit that sweet spot between 50 to 150 USD in terms of our rates. The rates are set in dollars, and then they're pegged to the token value. So the goal is to build like a global innovation ecosystem, leveraging this rich talent pool so that we can kind of build new digital solutions for various projects. By tokenizing and decentralizing that, we can build a more connected, more innovative, and more disrupted global community. Like I said, we started the company back in 2015. Spent the first year or so testing the hypothesis, then built out the architecture and the design, and started building out the platform. We're launching the pre-sale in a few weeks, and the token sale is going to follow. I'm Brian. We got a team back in Chicago. We got a great group of advisors. One of them is the handsome man here in the second row. We'll be around afterwards to answer any questions. And you can, here's some quick facts on the token sale because I know I'm running out of time, but we're raising 50,000 ETH. It's going to be a 5 mil cap on the pre. It's a fully developed product, splitting it between the team, the advisors, reserves, and the public sale. If you're interested in learning more about it, you can sign up for more information at CoderCoin.io, or you can go to our website, which is builtbycoder.com. I'm happy to answer any questions. We'll be around afterwards. Thanks. I should say with the mic.
Hey, can you clarify the business model again? So I saw the $50 to $150 hourly rates. But you're not a service model. I'm just trying to understand what, is it like a monthly fee, or is it hourly, or how does it work exactly?
Right, yeah. So some of those services, some of the solutions that are offered, like say like SEO or something like that, would be at a monthly rate. Some of them that would be more on like an hourly basis, depending on the product involved. So it might be, hey, I need someone to help me with a WordPress site. It might be, I need 3 full-time dedicated engineers for 6 months. So we basically look at it where the minimum engagement would be a 3-month contract. Kind of more traditionally, we want to go 3, 6, 9, 12. Some will be a la carte, just according to the needs of the project. So if you think about kind of like the vertically integrated venture structure, right? Like we're not upstream capital, we're not downstream like agency services, like we want to be the river. So the idea is that this isn't like a B2B SaaS play that I go and sell to agencies. This is a decentralized platform that isn't about companies coming through Brian and the Coder team and like getting their stuff built. It's about everyone being able to use this technology to launch whatever they want.
Okay, and do you have a sense at scale how that revenue splits?
Oh yeah, no, absolutely. So I mean, we basically look at, one of the things we want to do with the token sale proceeds, is because we obviously built the platform already, is to basically open up local offices so that if I'm a business owner or an entrepreneur here in Toronto, I'm not like outsourcing to Chicago, but the idea is that I can have a local branch, so to speak, with like a GM, sales lead, architect, designer, and product manager, so I can get in a room with people, whiteboard, hash out strategy, things like that. Our goal is for then each of those offices to be able to handle about 20 projects with an average contract value of $50K per year. So we want to go for like $1 million per year per market. And using the technology and the capital that we can bring in from the token sale, we think we can expand to 20 plus markets pretty rapidly.
Okay.
Is the target customer really a startup, or is it really an existing business who just wants to build an app? Because I guess I'm wondering, in a startup context, how do you compete with ramen? Because that's really what.
How do you compete with what? Sorry.
With ramen.
Yeah, well, there's ramen. Yeah, that's good. I have a general rule of thumb where I like people that hire me to pay me. So we don't do any equity-only deals. We don't do stuff for swag. Like we expect people to be, professionals that can pay for services. We have in the past actually done like, cash equity blend stuff, but that's not the long-term goal of the platform. For us, going back here, Oh, I guess I missed it. The engagement models, there's 4 different ones. Your solutions at the top. So it's not just the entrepreneurs, like kids in a t-shirt with an idea, a hope and a wish and a prayer, right? Like I can't pay my mortgage with pennies in the wishing well. So we also look at the startups, the small businesses, and the enterprise. You know, there's plenty of banks out there that don't necessarily have a culture of innovation and creativity internally. So there's opportunities for us to work with them. Maybe you have 3 different mid-level managers that also have to report vertically up and down a chain. They can all be using the Coder platform, have a decentralized talent force with centralized business intelligence on this platform. So the CEO, the CFO, the CTO, the CMO, the mid-level managers, and the people working on the project all have real-time intelligence into everything that's going on in the product. So you don't get lags in communication, you don't get delays, you can keep the project humming.
So is the idea really to compete with like kind of no-code platforms and things like that that are out there, or is it somewhere in between, or where do you see it?
It's not in this deck, but one of the things we want to do with the token proceeds is basically use bounty programs to stake development for what's going to be like a modular code repository. So the idea is to basically build out kind of like the Lego blocks of code, so that like if I come in and say, hey, I need payments, okay, we know what payments are, there's gonna be 30 different versions of that. Okay, you wanna work with Stripe, you wanna take ACH, okay, here's the code for that, snap it right in. So the idea is that over time, participation in the token community and the token economy makes it so that you can build new stuff faster because some of the components will already be built. Just like I can get I'm in a hoodie today, but just like I can get a custom suit tailored, it's still coming from a pattern. Is it 3 buttons? Is it 2 buttons? Peak lapel? The whole 9 yards. So the idea is creating those building blocks so that we can focus on the 20% of the secret sauce that really drives the innovation in a project, not the 80% of like the kind of standard stuff that comes into everything.
And last one, are most of the people that you're bringing on the platform, is it like distributed coders all over the world, or assuming locally? You sort of said local teams, but I just want to...
Right, so one of the goals with the local offices, kind of like the branches, so to speak, is to be able to kind of build a home base in each local community. So if I'm a developer, designer, marketer, or strategist, I basically, if I'm living in Chicago, I want to go to Toronto, I want to go to New York, I kind of have like a home office everywhere that I go. So that's a big part of the coder community. But the idea is that talent doesn't just live in Silicon Valley, it could be anywhere. And at the same time, the idea of tokenizing technology service market makes a lot of sense, because if I'm paying San Francisco technology rates for developers, I'm basically just paying the guys rent. And that's not exactly a proper valuation of an hour of technology services.
So my question is conflict of interest and IP. How do you handle that?
That's a great question. So IP, the Coder platform, you don't own that. Anything that comes into this code repository belongs to the token community. So if you look at it as a utility token that gives you a granted software license to use the Coder platform, as we build out this code repository and shared resources, you basically get additional licenses kind of built into that technology. If you're a client, anything that is not considered the Coder platform or part of that repository is work for hire, and you own that IP. But on that note, the nice thing about it is that we basically want the Coder platform to be like the operating system for the business, right? So like if we help someone get going from 0 to 1, we want to help them go from 1 to 10 after that. And by serving as the operating system for the business, it kind of has like a built-in stickiness component to it, where they're more likely to continue working with us by using the platform and the token economy.
Thank you, Brian.
Thanks.
If everybody would just stick around for a couple of minutes, the judges will give us their results and we'll hand out the grand prize, and so don't disappear yet. As you can tell, the judges had a very difficult decision. We saw three very different companies that are definitely hard to compare, and they were all very interesting. But the judges did reach a decision, and I'm pleased to hand the award to Will O'Brien, founder of JustGotThat.